Tip number 3 to help you avoid a future disaster is to be a tactical trader. This is the SVIX, which is a -1 times short volatility ETF, annual return of 10.18% with a maximum drawdown of 92.58%. Obviously, the drawdown is way too big. Now, this is the S&P 500, the SPY ETF back to the same day, with roughly the same rate of return at 10.89%, but with a maximum drawdown in the financial crisis of 55.19%. Well, if we could just reduce the drawdowns a little bit, then perhaps performance would get significantly better. We're going to use the VIX futures to reduce the drawdowns in the SVIX ETF. Some of you may have heard the term contango before, but with respect to the VIX futures, it's just when the second month is priced higher than the front month. So what if we were to short volatility only when those VIX futures are in contango, when that M2 is higher than the M1? Now for reference, M1, M2 VIX futures are in contango about 83% of trading days. This means you're exiting the market on only the riskiest 17% of trading days. So again, this is the SVIX and the SPY as our baseline. And now this is the result if we only short volatility when VIX futures are in contango. Again, 83% of trading days. The annual return has now doubled to 20.97%, and the maximum drawdown has been reduced to 79.66%. That's a massive improvement with a dirt simple threshold applied to it. Well, now what if we say, well, I really only want to be short volatility on about 70% of trading days. That will leave about 30% for me to move my capital to safety when the volatility market is elevated. And that improves the annual return to 21.77%. And it will further reduce the maximum drawdown to 64.44%. You can see how tactical rotation investing can allow the trader to get out of the market during the worst periods. Like the February 5th, 2018 Volapocalypse event. The warning sign was there. VIX futures went negative on February 2nd, 2018, before Volapocalypse happened on February 5th. A trader paying attention to the VIX futures would have been in safety that day, like we were in the VTS community. We didn't lose any money that month. In fact, we made a profit. Obviously, you'll want to go many steps further and add much more robust volatility metrics.